So, what is M1 and M2 money supply? So let's start off with what is M1 money supply. M1 money supply is seen as the narrowest definition of money supply in the system. This includes the most liquid forms of money that can be accessed the easiest. The components of M1 money supply include physical currency, also known as the notes and the coins that are in the system. For example, if you look in your wallet or if you've got cash lying around, that is a form of M1 money supply. That's in the system technically. Checkings account or demand deposits. This is the amount of money that is in bank accounts, mainly through checks, that is accessible via the depositor. Depositor meaning you and I who has that account. Other accessible accounts, these are accounts that don't typically fit the description of a checking account. This is just another type of account that is accessible by the depositor as well. So that's it. There's only three sort of main components within M1 money supply. It's physical currency, i.e. the notes and the coins you have. Check-ins accounts, so people who uses checks, etc. Another accessible accounts that doesn't typically fit the description of what a check is or a checking account is. This is just the UK M1 money supply, by the way. And as you can see, it's been decreasing. And then we kind of tailed off into 2024. If you look through, I will show you another example of during COVID, which I'm sure we all know that already, about what happened to money supply in COVID. What is M2 money supply? M2 money supply is everything within M1, but also includes other components as well. The M2 money supply is the most used measure of money supply, which is used by economists, traders, and policymakers to analyze economic health and assess both the financial and liquidity within the economy. If an economy is experiencing a downturn, you would typically see more money supply in the system to help economic stability naturally. If there's loads of supply, it means money is easily accessible. If there's less money supply, then it's more difficult for money to get access to money. So naturally, if you look at COVID 2020 as an example of that, money supply rose massively because it's difficult is a really bad, period, right? So the government or the central bank in this environment wanted money to be easily accessible to help support people. The components of M2 money supply are savings. So that is money that is held by the banks, which is accruing interest on the deposit. Although savings are less liquid, meaning you can't just use your bank card to access your savings, it's seen as a part of liquidity as it's easy access available to convert back into your standard account. Meaning, I know for myself anyway, I don't have a card that I can just use at a shop that takes money out of my savings, right? You have to move your money from your savings to your standard current account, basically. And that's why it's still part of the system, because it's very easy to convert. You just go on the app, bang, move it over, done. Now you can use it, for example. Money market mutual funds. These are investment funds that invest in short-term debt like government bills or certificates of deposits. And again, you'll learn about government bills in the later videos. Basically like bonds, essentially. Time deposits or certificates of deposits, which is CDs. These are accounts within the bank or institutions that offer a specific rate of interest for a specified time. These accounts aren't typically as liquid as they have penalties for removing your money early. So they'll say, we invest into this account and you need to hold it for a minimum of 6 months, for example. It's still accessible, but you might have a little bit of a penalty. You might have to pay a little bit of a fee, for example, to take that out. So here is an example of M2 money supply. And as you can see, it's kind of stabilized at the moment. So what's the application of M2 money supply? So as traders, we need to think about the thought process of the application. So applying M2 money supply is more about what it means for future policy and the reason why supply of money is being increased. The currency will react based on the future expectations of what that means. Remember, markets are forward-looking. So what they're going to be viewing it as is, why is M2 money supply being increased? Why is money supply being decreased, for example? And the markets will react based on that thought process. A central bank will monitor the money supply, and they may use it as a part of their policy decision-making. If the M2 money supply is shifting, they may need to control the different monetary levers to balance the scale, like bond purchases that you've learned in monetary policy, interest rates, for example. Use money supply as a way of seeing the overall liquidity in the system. Focus more on M2 as it includes crucial components of liquidity. If markets expect M2 or M2 money supply to largely increase, they may have a bit more of a cautious approach on the currency as an increase in money supply typically happens during economic weakness. So we know, money supply is generally always increasing, but what we want to be thinking about is the velocity or the speed in which M2 money supply is being risen. So if you go on to trading economics, go to money, then go to M2 money supply, then go back to COVID. This is more of a bit of homework, and see how fast that was risen. That was seen as a really dovish time, of course, because naturally, if there's more money being pumped into the system, means there's more supply, more, that's inflationary, right? So in that environment, it's generally seen as dovish, of course, because if, like cutting interest rates, basically, if there's loads of money going into the system, you might have to think, what does this mean? Why are they doing this? What's happening in the economy for M2 money supply to be massively increasing at this rate? Remember, the speed in which it's being, like I mentioned, is generally always going to be increasing supply of money. And that's why a lot of people are arguing about like cryptocurrency and stuff, because again, if there's more supply of money in the system, there's generally, the value of it naturally decreases. Think about it like watches. If there's only 5 watches made in the world, the price of that's going to be really, really big and really high. If there's hundreds of thousands of watches of that specific model, you naturally see the price of that because it's much more easily accessible. So that's what you have to think about, is why is it being risen and what does this mean for future policy? Always think about the step-by-step process. What does it mean here? What does it mean for the economy? What does it mean for the central bank? Therefore, the currency will react based on that thought process. So that is simply what M1 and M2 money supply is. We'll see you in the next video.